Today, a strong retail sales report, with retail sales surging in October. But what role is inflation playing in the boom? Walmart and Home Depot report strong quarters. That's despite supply chain issues and labor shortages. What helped them beat expectations? And one of the biggest pension funds in America is adopting a riskier strategy. Otherwise, it says it won't be able to pay its retirees. That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. The holiday shopping season got off to a roaring start in October. Retail sales shooting up 1.7% from September and over 16% from last October. Sales are up in almost all categories, led by non-store retailers like Amazon, auto dealers, and gas stations. Although rising prices likely played a big part in the retail gains. For example, gas prices are up over 60% over the year. The report suggests that high inflation was not yet dampening consumer spending, though, which is a key driver of the U.S. economy. Monthly sales were down in only two categories: health and personal care, and clothing and accessories. But signs of a more persistent inflationary cycle are showing. The prices of imports and exports surging in October. Import prices rose 1.2% last month. Export prices grew 1.5% over the month and 18% over the year. The 12-month increase is the largest on record. Fuel import prices also skyrocketing. They're up 8.6% over the month and nearly 87% over the year. And since home prices are surging too, now rent prices across America are going up faster than usual. NTD's Phil Zoe has the story.
Rents for single-family homes are up on average 10% year over year as of this September. Compared to last September, rents were up only around 3% on average.
I think rents will continue to go up.
Ridiculous. I mean, if we thought the, sales market is crazy, the rentals are even crazier.
Miami, Florida had the biggest rent hike with a staggering 25% year-over-year increase. David Drewy, regional president at Centennial Bank, who manages around 80 branches, is taking notice.
They moved down to South Florida specifically. They maybe don't want to buy a house year one. They want to get in and make sure where they want to live.
Phoenix, Arizona took the second spot with a 20% year-over-year rent increase.
The rents are so high that a lot of times families can't afford it, and you're competing with 20 plus people.
Realtor Diana Gutierrez was helping a family look for a 3-bedroom in Phoenix, which would usually cost $1,500, but now it's over $1,800.
That particular case was frustrating because they were putting in application after application, and sometimes you couldn't even get anybody on the phone.
Home builder confidence also rose 3 points to 83, when analysts were expecting it to remain stagnant at 80 points only.
If you can build a house, you can sell a house.
Las Vegas, Austin, Texas, and San Diego rounded out the top 5 cities with the most rent increases. Phil Zoe, NTD News.
And the new report has found that inflation is hurting poor and middle-class Americans more than the upper class. Inflation impacts anyone who holds or spends money by reducing the purchasing power of their dollars. But the report, compiled by a group of lawmakers, says it affects lower-income households more because they spend a large portion of their income on food, housing, and transportation. Prices for all three are way up. High earners, on the other hand, spend a smaller percentage. For example, food at home, low earners spend about 6 times as much of their income as high earners, 23% versus 4%. On housing, low earners spend about 5 times as much of their income as high earners, 57% versus 12%. And not many companies are raising pay because of inflation. It looks like that wage increase, along with some other factors, is bringing back some workers who went into retirement earlier in the pandemic. NTD's Fake Quarter has the details.
More retirees are making a U-turn back to work now. A researcher at Indeed Hiring Lab told MarketWatch more than 2.5% of retired employees in the U.S. went back to work last month. That's the highest figure since the pandemic started. One possible reason is higher vaccination rates.
And there's definitely a safer environment.
The CDC says about 59% of people in the U.S. are now fully vaccinated. Short-staffed businesses are offering more flexibility and higher wages to attract workers.
A lot of work now that is done virtually has allowed older workers who may have had a mobility problem.
The need for money also contributed to the return. A survey from IRI Retirement Readiness Research found that 1/3 of workers ages 62 to 66 have no retirement savings at all.
In an era of rising costs and goods, people will be basically forced back to work because they just want the money.
The IRS has stopped sending out stimulus checks. It issued 3 economic impact payments during the pandemic. The last payment of $1,400 was in March. Faye Quarter, NTD News.
And in market news today, big retailers Walmart and Home Depot reporting earnings. Both are performing strongly, as despite supply chain disruptions. And Walmart CEO says government stimulus being pulled back has also helped with labor shortages. NTD's Faye Quarter has more.
Walmart's earnings went above analyst expectations, with adjusted earnings per share of $1.45, 3.6% higher than estimates of $1.40, and revenues of $140 billion, 3.6% higher than estimates of $135 billion.
We continue to have momentum. Sales were strong throughout the third quarter, and we've seen a good start to the fourth quarter thanks to all the thoughtful planning and hard work from our associates. The long period of sustained demand for goods has stretched supply chains, resulting in out-of-stocks and inflation. Fighting inflation is in our DNA. Sam Walton loved that fight, and so do we.
When CNBC asked about Walmart's labor situation, Walmart CEO Doug McMillon responded, "It's much better. Here in the U.S., we saw a pretty significant change as the government stimulus started to go away. We are at full employment at Sam's Club U.S., Walmart U.S." Meanwhile, fellow retailer Home Depot also outperformed, with earnings per share of $3.92, 15% higher than estimates of $3.40. They had revenues of $37 billion, 5% higher than estimates of $35 billion.
Home improvement demand remains strong. Our customers remain engaged with projects around the home, and we continue to focus on delivering the best experience in retail. As we mentioned last quarter, we continue to see customers taking on larger home improvement projects, as evidenced by the continued strength with our pro customer, which once again outpaced the DIY customer.
The strong housing market has bolstered Home Depot, as well as rival Lowe's. Faye Quarter, NTD News.
And the 3 major U.S. stock indexes closed higher today, possibly boosted by that strong retail sales data. The Dow rose 55 points, about 0.2%. S&P 500 gained 18 points, about 0.4%. And the Nasdaq gained 120 points, about 0.8% today. And JPMorgan is suing Tesla for $160 million. The bank claims Tesla hasn't made good on its stock warrants agreement. The 2014 agreement allowed JPMorgan the right to purchase Tesla shares at a set price when the warrants expired in June and July of this year. And according to JPMorgan's complaint, since this strike price was higher than Tesla's share price at the time, the car maker should hand over shares or cash. But the bank says Tesla hasn't paid it in full. Tesla is disputing the agreement because JPMorgan revised the strike price upwards after Musk said he was going to take the company private in 2015. It then revised it again when he said he wasn't. It appears these types of revisions were allowed under the deal, but Tesla has said JPMorgan was trying to take advantage of Tesla's volatile stock at the time. And one of the largest pension funds in America has been forced to take on more risk to try to meet its commitments. The California Public Employees Retirement System, or Calpers, says it'll make borrowed money or leverage a key part of its investment strategy. Leverage can amplify gains or losses depending on how the investments go. And the Calpers board just voted to borrow and invest $25 billion. It's about 5% of the fund's total value. It'll also increase its exposure to riskier alternative investments like private equity or private debt. Like many other U.S. pension funds, Calpers is short of cash and estimates it will need an average 6.8% annual return over the next 20 years. Otherwise, some retirees could be left in the lurch. Calpers hopes that by taking on the additional risk, it'll be able to hit its targets. So joining us to discuss the Calpers vote is Lance Roberts, Chief Strategist at RIA Advisors. Roberts helps manage $1 billion of assets to RIA. Lance, great to see you. Thanks for coming on.
As always, glad to be here.
So Lance, oftentimes money managers, perhaps like yourself, will use leverage to manage risk or maybe hedge certain bets. But it seems to be Calpers, one of the biggest pension funds in America, are going to use borrowed money to chase returns. You think this is risky?
Well, yes. Let me correct one thing you said. I never use leverage to manage risk, right? Leverage is about taking on more risk. So, in other words, if I just, for simplicity's sake, if I have a portfolio of stocks and I want to borrow against that pool of stocks, I can then go buy more stocks with it. And of course, you and I have spoken about margin debt here before and the fact we've got record levels of margin debt. And this is because investors are speculating in the stock market. What's interesting about Calpers is that Calpers is a very large pension fund, and they have what is known as a assumed rate of return. They have to make 7% every year. And now this is important to understand here. They have to make 7% a year in order to keep from having to increase the contribution rate to their participants in the plan. In other words, if Calpers says, I'm going to reduce the rate of return to 6%, now the participants have to contribute another 10% of their income to the plan every year in order to meet their pension requirements. So that's why all these pension funds are stuck at 7% annualized returns, which they haven't gotten. And that's why most of these big major pension funds are deeply underwater in terms of their pension obligation. So now here we are 12 years into a bull market. Now they think it's a great idea not only to lever up the portfolio, but also to do it into private equity, which is, interestingly enough, one of the most highly illiquid investments in the markets, and the one thing that goes very wrong when there's a bear market. So, for Calpers, I think they're putting themselves in a really bad position over the course of the next couple of years.
And as part of this increased allocation or increased exposure to these alternative assets like private equity, there's also a 5% allocation to private debt. Is this
Right.
shadow banking or unregulated banking we hear about?
Well, yeah, absolutely. That's really what it is. And again, this is all reminiscent of what we saw back in 2007 as a good example, because at that time, Bear Stearns had two high-yield mortgage-backed security funds, and they were basically marketed as a no-risk, high-yield bond fund. And those were sold to pension funds all around the country. And of course, those were the two funds that went belly up. And of course, the Federal Reserve had to bail out Bear Stearns. Bear Stearns ultimately selling for $2 a share back in the early phases of 2008. But this is all very reminiscent of that. This is now after years of poor performance in a lot of these pension funds. They're now going, well, I guess the market's just going to go up from now on. So let me take on as much risk as I can get to try to catch up. Normally this is stuff we see very late in the market cycle, unfortunately.
Because I believe their new target is 6.8% average return over the next 20 years, right? And this is in an ultra low rate environment. How do you see this playing out? You mentioned bailout. There's some people talking about bailouts related to these pension funds as well. What do you think?
Well, no, it's absolutely true. And actually, this was one thing that was embedded inside of one of Congress's, bailout plans early on, because they wanted to supply these municipalities with more capital to bail out their pension funds because the municipalities were in so much financial trouble. This is a $70 trillion problem that is sitting out there in these pension funds that, yes, will eventually have to be bailed out. And the more leverage they take on is going to become problematic when we do have a downturn. Now, while Calpers is predicting a 6.8% annualized rate of return, the market is currently trading at 40 times earnings. That is only 4 times earnings less than what we saw in 1999. Market cap to GDP is 2.5 times the economy, highest level on record. Price to sales is 3. That's the highest levels on record. No matter how you move valuations, forward returns over the next 20 years are going to be close to 0. So Calpers, they're going to have a big problem in a few years, particularly when the markets do eventually have a correction and they do revert. They're going to be so deeply underwater that leverage is going to come back to haunt them.
Interesting. A lot to look forward to. Lance Roberts, RIA Advisors. Appreciate it. Thank you.
No worries. Thank you.
An ailing Chinese property developer, Evergrande, faces a battle to pay its debts. With around $300 billion in liabilities, it's been lurching from one deadline to another, often paying at the last minute. Now it looks like it's taking a very personal toll on Chairman Wei Ka-yan. He might have been selling off luxury assets to help pay the debts. Filings at Hong Kong's land registry show say he's pledged 3 luxury homes in the city to investors. Wei rose from humble origins in a Chinese village. 4 years ago, his net worth was estimated at $45 billion. Now it's thought to be around $11 billion. Chinese authorities have told him to use some or all of his wealth to help Evergrande honor its debts. And the TV industry is looking for new ways to count viewers. It's after ratings giant Nielsen was suspended. Could have a big impact on advertisers too. NTD's Evelyn Lee has the details.
The TV industry is looking to replace Nielsen. Now, several network TV stations are looking for alternatives for the company that was synonymous with TV ratings. NBC Universal even plans to host a forum. In it, they plan to discuss alternative ways to measure audience. TV executives have been complaining about the company. They're saying their shows get more viewers than Nielsen can measure, and that Nielsen uses outdated technology. But they're not the only ones. Earlier, the Media Rating Council found that Nielsen undercounted TV viewership in February by up to 6%. That means advertisers lost potentially hundreds of millions of dollars in revenue. But David Kenny, Nielsen CEO, says he doubts that big media companies will start over with something completely different. In an open letter, he says that the company needs to move faster in advancing measurement and that they will ensure they're delivering the most accurate measurement of the audience. Evelyn Lee, NTD News.
And still to come this evening. Holiday spending. A new survey reveals many Americans are willing to go into debt this year, but are hoping to spend less than they did last year. And a group wants to pool crypto and buy a 230-year-old copy of the U.S. Constitution. The group is trying to collect $20 million before the auction. That and more coming up on NTD Business.
Hello, I'm Mike Lindell. Cancel culture has not only affected myself and MyPillow, but millions of you out there. Before all this started, I had already written in my memoir, I dedicate this book to anyone that's looking for hope. Well, right now, we're all looking for hope. I believe that my story is going to bring inspiration and hope to everyone. By the time you're done reading my book, you will believe that with God, all things are possible. To thank you all for your support, I'm offering some of my best prices ever on MyPillow products, including this exclusive bundle. You get my book and these 5 MyPillows. They all have beautiful scenes and verses from the Bible, such as Isaiah 41:10. Do not fear, for I am with you. This 6-pack bundle is regularly $219. Now it's just $99.98 and free shipping with your promo code. Go to mypillow.com and use the promo code on your screen or call the 1-800 number below. Thank you and God bless.
The performance was enchanting.
I feel better about the world. I feel uplifted. It touches you. It really does.
The expertise of the dancers was really, really strong.
To know that it was live music was really fantastic.
We didn't want to miss this.
Make sure you see it.
Have to come. Life-changing.
Coming to West Palm Beach, Fort Lauderdale, and Miami, November 8th through January 9th.
There are 16 million children struggling with hunger in America. That's 1 in 5 daughters, sons, neighbors, and classmates who don't know where their next meal is coming from. Yet billions of pounds of good food go to waste every year. It's time we do something about it. Feeding America is a nationwide network of food banks that helps provide meals to millions of kids and families in need. Visit feedingamerica.org to help them feed even more. Together, we can solve hunger. Together, we're feeding America.
Welcome back. A new survey by creditcards.com shows that more than 40% of consumers are willing to go into debt shopping for the holidays this year. But more than 3/4 of respondents are looking for ways to save on gifts. NTD's Andrew Thomas reports.
Parents plan to spend an average of $276 per child on gifts this holiday season. But supply chain issues could also impact what's available.
I don't think it's going to be a total disaster. I don't think it's going to be like, oh my gosh, we have nothing to put under the tree. But I think that certain items, electronics, are really hard to find. Video games, cell phones. If you're looking for kind of the latest and greatest there, it's going to be hard to find.
Credit card industry analyst Ted Rossman says credit card debt has fallen 13% from the end of 2019 until now. But there could be an uptick in spending due to inflation and the pandemic.
Inflation is up, so everything costs more. Things are reopening, so people are traveling more, they're having more parties. There is a lot of pent-up demand out there. And a lot of this we're thankful for because it represents progress against the virus. But then on the other hand, from a budgetary standpoint, I do worry that people may start to run those credit card bills back up.
Buy now, pay later can be an effective money-saving tactic, but it can be easy to lose track of actual total spending.
Sometimes we kind of play these tricks on ourselves, but what you really should do is think about the total package. So your existing debt, things you're planning to buy, gifts, parties, travel, make a good plan now so it doesn't sneak up on you.
Holiday shoppers should start early and use browser extensions like Rakuten or Honey to find the best coupon codes. 0% balance transfer credit cards are also a great money-saving tool, but consumers should still make sure they're making progress, paying off their credit card debt. Andrew Thomas, NTD News.
And KFC wants its customers to ditch the drive-thru because there is a new alternative it believes may be more efficient. It's called Quick Pickup. Works like this. You order ahead on the KFC app or website, drive to the location, and park in a dedicated spot. Then you stroll in and snag your food off a shelf by the register. The idea is to reduce long lines that slow down service at the drive-thrus or inside the stores. The company cited a survey showing the speed of KFC drive-thrus slowed down by more than half a minute in 2021. Quick Pickup is available in most of KFC's roughly 4,000 locations. And the annual Icons and Idols Rock and Roll auction returns to New York this fall. Julian's auctions will feature memorabilia from some of the music industry's most legendary artists of the 20th and 21st century. NTD's Andrew Thomas has the details.
Julian's Auctions is hosting its annual Icons and Idols Rock and Roll auction live at the Hard Rock Cafe November 19th through the 20th. Items up for grabs include Eric Clapton's Derek and the Dominoes debut performance stage-played 1968 Martin D45 guitar, handwritten cashmere lyrics from Robert Plant of Led Zeppelin, and the jacket worn by Michael Jackson in his They Don't Care About Us music video.
The Eric Clapton guitar, it's a Martin guitar used by Eric Clapton when he was with Derek and the Dominoes. In fact, for their premiere event at the Lyceum Theatre in London, June 1970, we estimate the guitar 300 to 500,000. That's a conservative estimate. Eric Clapton, highly collectible, and this might be one for the record books as well.
Over 900 items from some of the world's biggest music stars will be up for bidding, including several items from the rock band Nirvana and frontman Kurt Cobain.
Yeah, Kurt Cobain, of course, highly collectible. We sold his guitar last year for $6 million, so since then people are coming to us with consignments. A set list written on a tablecloth, incredible. We also have another set list. We have a teenage photograph of Kurt Cobain. Very rare do you see a photograph of Kurt Cobain so young.
Dresses worn by Amy Winehouse, Katy Perry, and jewelry from Elvis Presley are also up for grabs.
COVID has impacted people. People want to spend money. People are spending money on themselves. They're going after the toys that they want. Before that, they might have considered investing in the stock market or something else. Now they want something collectible.
Julien's Auctions New York public exhibition will run through Friday, November 19th. It's open from 11 a.m. to 9 p.m. Eastern Standard Time and free to the public. The Icons and Idols Rock and Roll Auction is on Friday, November 19th and Saturday, November 20th. Andrew Thomas, NTD News.
And a group is pooling money together to purchase an extremely rare printed copy of the Constitution, one of only 13 remaining copies. And they're putting together the money in a very different way by crowdfunding cryptocurrency donations. The group is called Constitution DAO, and so far they have raised nearly $6 million. The goal is to raise $20 million. Sotheby's says the copy could fetch between $15 to $20 million. The donors won't receive ownership of the document. They will have a say in how and where it's displayed, though, and will have input into the group's mission. The group says if it loses the auction, it'll return the funds. The document was printed for members of the Constitutional Convention 230 years ago. That's the latest business updates for today. You can still catch NTD Evening News. That's with Stephanie Cox at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching, and we'll see you tomorrow.